Hey traders, Stephen Kowitzel here with thetradersplan.com. It is Friday. I think it is June the 9th, maybe June the 10th, somewhere in that area. Probably June the 10th. So let's take a look at the market, and then we're going to look at the top ETFs of the week. So I want to start with the S&P 500. Honestly, yesterday's action was not good because we had, this heavy downtrend. You had a little breakout. You also could call it kind of a bull flag right here, however way you want to slice it, dice it, and then the market just failed. It just failed. It did not hold that 20-day moving average. It broke below this level. In my opinion, that's opening it up to further downside. Now, does that mean it's going to go all the way down here? No. It could just chop around for a little bit and really go into sideways action, which is never fun, and you really just want to sit those out the best you can. But yesterday's price action to me was a major warning sign that you definitely want to be cautious in the upcoming week. Same thing here with the NASDAQ. You really had a surge, a flag. You could draw it wherever you want, but it broke the previous weeks. It was holding this line right here, and it just broke, and it broke on heavy volume. So I took some precautionary measures. I took some off the table, and even though there's a mixed bag this morning, and inflation reports are coming out, and that could cause the market to turn around, and everything could be all good. This could be just one giant shakeout. But for now, yesterday's price action was pretty bearish in my opinion. So if we look at what is strongest in the last week, right, we have UNG, no surprise there. This has almost tripled, doubled at least, and then some, and it just keeps going higher. And honestly, it's really choppy. It's really volatile. I'm not getting involved in that. It's funny because I traded this, and then I made money 3 times, and then I sold it, and then I missed this one. But it is what it is. But it's getting really volatile and really kind of hard to tame. So usually that means that there's a consolidation coming or a pullback coming of some kind, even though it really seems like it's going to the moon right now. But the more volatile it gets towards the top, I'm just going to step aside. Mostly commodities in the top 10. You have corn. Corn, if it breaks back above here, it looks like a double top, but it's in an uptrend, and agriculture is in an uptrend. So if it comes back through here, I think that could be positive for corn. And you have wheat and soybean kind of all in the same boat, although wheat is a lot more volatile. You got a really straight up shot right here. See, this is just a really volatile consolidation, and probably not for me. If I were going to take something in the ag space, I would definitely go back to corn, or soybean is actually even looking better. It's already breaking out right there. I definitely own some energy ETFs, and I've really just been holding them, and they have been doing just fine. But the market is really pretty volatile, and I would say that the fact that the market broke down yesterday, maybe that can change today, but that really wants to make me pause and at least assess for a few more days to see which way the wind will blow. Now, but let's review. So wheat, China, I'm not getting involved in China. Oil, you can see all this, but the really, in my opinion, the only aggressive sector, kind of non-commodity aggressive sector that is close to being in the top 10 is the solar, and that's what I was talking about last week. It's been outperforming the market and bottomed way before the market bottomed, and has been going up for about a month, maybe 5-6 weeks now. And it does need to pull back. It pulled back with the overall market, and it is aggressive. So, if this really pulls back into this range where that 50-day moving average is and the market settles down, I would see that as a good opportunity. That is in the $69, kind of $70 range, kind of right in there. If it pulls back in that range, plus the market is calmed down, I would think that's a good opportunity, because anything that bottoms before the market and starts to break out, it did hit some resistance, but that doesn't scare me because the market rolled over as a whole. So I would think that this could come back and break back through. So that's one ETF I mentioned last week. Let's look at all of them I mentioned last week. They were looking really good at the time. You have semiconductors. This also was looking good last week until yesterday. Right? It was breaking through the 50-day moving average last week. It was looking like it was wanting to come out of here, and then it just broke. So, this, in my opinion, no more. The market and semiconductors have more work to do. This one bar just really wants to put me on the sidelines for a minute, at least with growth stocks, until things can really get figured out. I also mentioned copper. Copper was looking pretty interesting as far as sold off. It came right back. It's hit resistance, but with this too, this got hit actually really hard yesterday as well. So really makes me want to be a little bit cautious. When you have a bad day in the market, I always say, what's up the most, what's down the most? And if something's down more than the market, then I'll usually pump the brakes on that idea for a minute until I see something else. And keep in mind, I give ideas and I throw out ideas, but I will change my mind in a day. Okay, so just because I like something doesn't mean I love it, or doesn't mean that I really want to get involved in it for a very long time. If I like the idea, it's acting right, and then all of a sudden it's not ready. I'm just moving on. You have to be willing to pivot like that. Same thing with LIT, global lithium batteries. This was down quite a bit yesterday. It is more aggressive than the overall market. So, with this one, with all of the aggressive ideas I gave last week, now I'm really just paying attention to the market more than anything, and letting the market settle down. And I wanted to really show you something. So, yesterday we had this surge, we kind of had this flag, and then we had this sell-off. The market tends to repeat, and it almost looks like now I'm in 2010 right here. I'm in the summer of 2010. But it almost looks like this right here. You have a surge, right? Above the 20, above the 8, everything's looking bullish, and then you have a sell-off, right? And I would say this bar right here was what happened yesterday. Does that mean all this is going to happen? No. But the point is, we could get some choppy sideways for a month, or a week, or there's not a specific timeline. But look at the rally that comes after these ugly, ugly markets. And I really wanted to show you that the market, strong markets come out of ugly rallies. And that's something that you really, really need to pay attention to and make sure that it doesn't wear you out. It's okay to sit on the sidelines, because the more you're trying to trade every single bar, the more it's going to wear you out. And then you're going to miss the mega rally that can make up for any losses up in here and then some. So I hope this was helpful. Have a great weekend.